Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of USD CHF US dollar Swiss franc for Monday, 1st June. If you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex analysis playlist for the analysis of other currency pairs. So let's get started. So this is the chart of US dollar Swiss franc, and as you can see, I am in the Forex time frame, my favorite Forex time frame. And if we just look at the chart, okay, if we just look at the chart, we can easily see that market is in downtrend. There's no doubt about it. Market is in downtrend, and as we all know, trading in a trending market is always easier because see, whenever market is in downtrend, we get sell on rise market. So sell on rise market is whenever market will be going up, hit the resistance. If market reverses from the resistance, short term market. So we got plenty of opportunities and we also made good amount of money or good profit from this USDCHF. Okay, because the market was going up, it was getting resistance and we shorted the market. But yesterday things took a different turn. Okay, we all know that there was sudden movement or sudden buying pressure on the USD. And because of the USD, you can see that market formed a green candle, and after the market formed a red candle. Okay, but whatever, market broke the resistance for some time, and still market is trading above the resistance because see, because in USD CHF we were having dual resistances. If you can see clearly, uh, apart from this black line or this black trend line, we were also having 50 moving average. Okay, 50 moving average as the resistance. So we were having 50 moving average and the trend line. Okay, we were having two resistances in USD CHF. That's why things were very easy for us. But right now we can see that the sudden buying pressure or the sudden big green candle has changed the whole scenario, and right now market is trading above the resistances. And if we consider the overall theory, then the resistance is gone. Okay, these resistances are not valid right now. Okay, now let's look at the weekly time frame and see what the weekly time frame is doing. So the weekly time frame is not telling much. We can just see that market is in downtrend. And there is uh, not much data available for the weekly chart. Okay, we have the resistances and support, but the weekly resistance and support are quite far away, and we do not require those price levels for Monday and Tuesday. Okay, let's jump to the first time frame. So what should be a strategy for Monday then? Okay, for strategy for Monday, what you can do is, if you are looking for a safe trade, okay, if you're looking for a safe trade, you can short the market if you find market below this level. Okay, if you find market below this level, you can short the market. Okay, and this is the level that you need to come out. Just remember one thing, that see, the because the market is in downtrend for a long period of time and things have gone a little bit complicated, and as you can see, there is not much volatility in the market also. Okay, so do not expect huge profit, because see, this is your take profit target. If you short the market at 8963 level, this will be your take profit target, and your stop loss is also here, and this is your stop loss. Okay, this is your SL, this is your TP, and this is your entry. Okay, so these are the three levels, and you can see that this trade is not a good trade, or not that a good trade. Okay, because this trade is just following the risk to reward ratio of 1:1. So if market comes down, okay, then also you do not need to short the market. Let the price cross this level, 8963 level, then only short the market. And remember, confirmation is important. Okay, if you see that market is forming spinning top kind of patterns or price is rejecting from below at 8963 level, then do not short the market. Confirmation will be in the form of a red candle or a shooting star pattern. If you see candlestick patterns like this, if you see selling pressure at these levels, 8963 levels, then only short the market. Otherwise, no, do not short the market. And you need to come out by 8932 level, and this is your stop loss. So it is a 1:1 ratio, and this is it. Because this candle has changed many things, and being in a downtrend for a long time, the volatility is also coming down, and after a few days we will see that market will be trying to go up. Market will be trying to go up, and it will be going up also, because see, whenever market is in downtrend for a long period of time, it will go up, it will retrace. Okay. So this is it. This is the only strategy according to me in the USD CHF chart. Okay, if you have a different analysis and if you have a different entry and exit levels, then feel free to share on the comment section. I would love to learn from you. Anyways, this is it. Thank you so much. All the best. Take care.